say hello for those who don't know me. My name is Moritz Schild. I'm one of the co-founders and board members of Hanseatic Blockchain Institute. We are domiciled in Hamburg, and well, we tend to do two things. First of all, to help networking within the blockchain and crypto community within Germany. And secondly, we want to distribute the word of the potential of blockchain and crypto. And that's why we do this Blockchain Monday called Blomo, which takes place more or less every Monday evening with different topics, different speakers, different guests. We had lawyers talking about data protection on blockchain. We had a bunch of startups, of course, presenting their projects. We had investors and investment-oriented themes, and we had tax advisors talking about taxation. So this gives you a broad overview of what we do, which somehow illustrates how broad the blockchain topic itself is, and that's something that I personally pretty much like about it. It's not just an IT topic; it's a technology that has the potential to significantly impact many industries and many areas, particularly the financial services industry. And I'm happy to have Alan Julian here from Solaris. And I think Solaris is was the first player in Germany to start saying we are offering banking as a service, right? If I remember correctly, maybe you give us a short background on what Solaris is before we move into the digital assets area.
Sure. It's also a little bit of part of the presentation itself, but happy to take this question already now. We are indeed not the first banking as a service provider, but the biggest by now in Europe with our acquisition of the banking as a service provider in the UK called Contis that we did last year. And when we began offering banking as a service in 2015, I think there were already companies out there like Fidor Bank, Zutor, but also Wirecard, who had also a substantial part of their business, not balance sheet, because that was somewhere inflated. But business especially in the fintech ecosystem was indeed in banking as a service, and they were the ones enabling N26 before they had their own license, before they had their own core banking system, and kind of helped them come to birth. Therefore, it is not our invention, though we are quite strong in that by now, and and we'll have a look into that more in details later.
Good, perfect. I'd say start with your presentation, and please, all attendees, let's do it as interactive as possible. So please don't hesitate to ask your questions using the Q&A button. You should be able to see F and A in German, and then in the end we will definitely be able to have a discussion on what you're presenting to us.
Cool. And to the participants also, every answer in a question in German is fine. I will take it, and Alan, my colleague, will take the ones in English. So don't bother around with English if you like to write in German. Cool. So thank you, Moritz, for having us. And the second time while you were doing the intro, I was checking on YouTube, and the first session where you hosted me. That was, I think, in May or April last year. So roughly a year ago. And now we are back with a completely new storyline, though, with the same high-level introduction of what we are. Because we figured out, people have heard about Solarisbank. And yes, you may have once heard about banking as a service. But we found out that it is again and again important to show what we mean with B2B2X, and we will showcase that with a nice storyline, with a little bit of a kind of a historic view on banking in Germany. But before I start, let us introduce ourselves. My name is Julian Grigo, internally known as Julian Crypto. And I'm heading the unit digital assets within Solarisbank. We have 4 units. The one is doing banking, so the thing that we are most known for. The second one is doing KYC. The third one is doing lending, so credit business. And we, my colleague Alan and I, are doing digital assets. So here we talk about really crypto services. That's my role. And Alan, do you want to introduce yourself?
Yeah, sure. Thanks, Julian. So my name is Alan Kennedy. I'm originally from Canada. I've been living in Berlin for 5 years and been with Solaris for 3 years. And I am known as not Alan Crypto, but kind of the crypto guy when it comes to external communication. And that's really where my expertise is in, I'm the salesperson, but I also have my thumb on the pulse of the market, what their needs are, and has been very pivotal in obviously shaping the products that we build, because it's responding to the market. So it's myself and Julian work very closely together, and I will be covering kind of the middle portion of the webinar. But that's about it. I'll hand it back to you, Julian.
Cool, thanks, Alan. And we should think about Alan Crypto. I like that more. So today's talk is, we titled that Solaris, the backbone of the European crypto economy, and what that means, we'll look into more detail. Let's first start with the agenda. So we have basically 3 parts we want to highlight today. The first one is, what is actually banking as a service? What is the new term embedded finance? And how this relates to crypto, because what we started doing in the banking side, started doing with Euro, we now do also with crypto. So it perfectly fits into the overall strategy of Solarisbank. The second chapter is the use cases that we enable. And here we split again into 3 parts: the live ones that you can already try out, the realized ones that are about to go live very soon, that we are currently building with our partners, and the crazy ones that we are not building yet, but would like to build from tomorrow on. It's just missing the one innovator sitting in the audience, sitting on the market, who wants to realize that. And we conclude that with the 3rd chapter, which is the launchpad to Web3. And what we mean with that is, you don't have to build the core boring commodity products. You don't have to get all these licenses. Just use what we are doing, what Solaris is doing, and you can use us as the launchpad into Web3. Now, it may still seem or sound a little bit cryptic. We make sure during the next couple of minutes to shed more light into that, to put some color on this slide, and so that in the end, that makes all sense. We want to be the launchpad to Web3. And with that, let me kick it off. And I want to kick it off, as just already said, with a little bit of a story about the history of banking. And so this chart here should kind of in a schematic way show what banking was, let's say, in the 80s, maybe in the 90s. So we have overwritten that with static pillars. What do we mean with that? Basically, when you in the 90s wanted to go get a card issued, maybe you wanted as a company get corporate banking services, you wanted to buy a stock, you wanted to get a loan for a car, for a house, you just wanted to open a bank account. What did you have to do? Obviously, you had to go to the bank with all the consequences that meant, right? Maybe get into your car, drive down to the next city to sit in the maybe make an appointment, sit down with the people working at your bank, and then finally you get what you want. Maybe you have a card back then already, and you want to get money out of your ATM. Maybe you had to go to the next bank to just hit your bank and not to pay like 10 D-mark, 10 euros, whatever, for the service you wanted to get. So basically, it was a landscape of static pillars that were just standing there, here and there, and you needed to go to them in order to get a banking service provided to you. Whatever you wanted to go do, you needed to go to the bank. But
to add on that, I mean, there are things that the young people your age can't even imagine that there was a thing called Kontoauszugsdrucker.
Yeah.
And you would go to your bank, put your card into this machine, and it would print your statement of account. And that was the fastest way to know if your salary has arrived or if any payment has been made. And you might need to go to the bank, put the Kontoauszugsdrucker thing, and then put it on a fax machine to kind of prove that a payment has been made.
Yeah, and
you're about to see how far we've come, I think. But I'll hand it back to you, Julian.
No, right. I mean, I'm perfectly relating to that. Today is the 28th. So I was sitting here in the morning at the same table where I'm now standing in front of what I usually do for presentations. And I was in a Zoom call, and the screen of my mobile went on and was telling me, there's a kind of a transaction incoming on your bank account. And it was the salary. So I did not have to go to the bank. Like in your example, Moritz, it just came to me, the service. And this is perfectly relating to the next slide, because what do we have today, right? Back then we had to go to the bank, and now not only is the bank coming in on our mobile phone, no, it is even coming, the financial services is even coming into the service that we are using. Right. So, for example, you have Uber, and the Uber drivers are offered a bank account with Uber. Not me as a what is it, participant, or someone who's driven in a Uber. No, the ones driving the Uber are offered bank accounts because it makes sense. They get their salary anyways from Uber. Why not the full banking account? And then maybe Uber can give loans for buying a new car and all this stuff, right? So here we can see the financial service is coming into the ecosystem where the people are. The Uber driver is driving the car all day, so she has definitely the app open. So why not provide a bank account? And we can see the same with Amazon. They are offering not only payment methods, they also offer buy now, pay later products, so kind of loans, and they sell insurances, which is also a financial service. And Apple Pay, okay, they have the smartphone, they have the NFC chip into that for near field communication. Why not offer a payment service and just enrich the ecosystem of your end customers? So what do these three companies, Apple, Amazon, and Uber, have in common? All of them are customer-centric. That's how they grew big. They are all digital. They are all from this kind of internet revolution age. And also, they put the financial service into the right context. And here's the fourth thing that is missing. And this is, they all share that they are not a financial service themselves. They offer financial services, but they are not a bank. They are not a financial service. They are not a payment service. They are not a lending service. Still, they offer that. So how do they do that? We'll look into that on the next slide. And here's a very nice showcase where we show what we are doing as Solarisbank to enable a non-bank like Samsung to offer a payment service and a lending product to their end customers. Here again, you have Samsung. They now offer these services. They are not a bank, still they can do it. How do they do it? Via a banking as a service provider, and this is us. So basically, when you ask at the beginning, Moritz, are we the first banking as a service provider? This slide is not giving you the answer if we are the first, but it is giving you the answer, what is a banking as a service provider? And a banking as a service provider has an API. And in the background of this API is a financial product with the license. And this API can then be embedded into a front end, like here with Samsung, for example, and offer this service to the market. Specifically, these are three APIs. The one is for KYC, so we identify the end customer of Samsung. We offer a decoupled card, which is a kind of a credit card or a debit card lying in the front end of Samsung, and we kind of get the payment from another existing bank account. Must not be ours, can be someone at a bank account at Deutsche Bank or a Sparkasse, and we offer a credit line. We call it split pay, also known in the market as buy now, pay later. Moritz, you seem to have a question?
So this is working in Germany only, or is it on a global basis, cooperation with Samsung?
So you can, at least via what is called reverse solicitation, use this service across Europe.
Okay.
It is not working globally. There are many different regimes when it comes to regulation, and you may be familiar with passporting. So usually you can offer financial services in the European Union once you have a banking license in one of these countries, like Germany. Then you can offer that also to France and Italy.
Okay, cool.
Cool. So what we wanted to do here, maybe last sentence to this slide, you can see on this idea of banking as a service, on this idea of embedded finance, that non-financial institutions offer financial services. We thought, okay, now like who is now bringing these APIs? And maybe it makes sense to build a whole company, a whole business model on that idea, on embedded finance. And what that means, we can look in the next slide, and that will be my last slide until I hand over. Oh no, here's something in between before I hand over to Alan. So we talked now about embedded finance, embedded banking. Now let's talk about embedded crypto, because what are the similarities between crypto and banking? First of all, it's a high demand for security. You do not want to lose the private key of a public address, because then it can be stolen, right? Second, it is also the core product is a commodity. There's not too much differentiation in a bank account, and neither is it a much differentiation in a custody product or in a brokerage product in crypto. So that's commodity. You just plug it in, a little bit like toilet paper, just cleaner. And then you have, it's also regulated, right? So not everyone can offer a bank account. You need to be a bank. Not everyone can at the same time offer a custody service. You need to be a regulated custodian. So what we want to show with this slide is no matter if you want to offer banking services or crypto service, you need to be extremely secure. Your product in the end is only a commodity, and it is highly regulated. And therefore, we are convinced that putting custody product and the crypto product overall next to the banking product makes a lot of sense. It's just making the platform more complete and enhancing the service offering by Solarisbank. And we are strongly convinced that custody, just as the bank account on the banking side, custody is kind of the launchpad into crypto. No matter what you want to do as a second product like brokerage or crypto collateralized lending or staking, you always need custody first. And this is why we have custody first put next to our product suite, and of course more to follow, but that's the overall idea. There's banking as a service and embedded finance, and it makes only sense to put crypto next to it. So, and now on the next slide, you can see our business model, what we call B2B2X. And this is now a little bit of a crowded slide. Still, we think it is extremely important to understand. In order to understand Solarisbank, you need to understand what we mean with B2B2X. So let's start here in the fat dark blue bar, where you can see KYC and banking, cards, payments, lendings, and digital assets. So what we list here is each group stands for a suite of different products. For example, for KYC, we do business KYC, we do video KYC, we do bank ident. These are all methods to identify in an AML compliant way, GWG-konform in German, end customers of financial products. Now let's jump on the right side. We can see digital assets. So as you can see, one part of this huge credit product suite of Solarisbank is digital asset products. And here we talk, for example, about crypto custody, but also crypto brokerage. So what do we do with these products? Do we offer them directly to end customers? Clearly, no, right? We talked about this, for example, Samsung Pay. This is our partner. We bring our API, put it into the backend of the partner, and only the partner then has the end customers. And these end customers can either be retail clients, that would be B2B2C, or it can be businesses, B2B2B. And that means that via cooperating with us, all these potential different partners that you can see in this gray bar, can be fintechs, corporates, big techs, fintechs, they can have licenses. They don't have to have licenses. They can use our APIs and offer then our services to their end customers. So the first B, it's us, Solarisbank. The second is the partner, and the X stands for either C clients or B clients. that's the business model. And with this rather dry slide, I hand over to Alan to come to more the colorful use cases that we can enable in the crypto ecosystem.
Yeah, thanks so much, Julian, and thanks for handing me over for the fun stuff. So before we jump into the fun stuff, though, we're going to stop here because what Julian mentioned in the previous slide is that we have each of our individual business units. They carry different products. And what I'm showing you here is kind of a microscope into our digital banking products and our digital asset products combined together. And these 7 products, you're going to see in every single use case slide on the bottom left, and each one will be lit up either orange or kind of dulled away. And that's going to show you how each one or the combination of the different 7 commodity products can be combined in different ways to enable really, really cool use cases. None of the use cases we made up at all. We're not the ones doing it. We're the ones providing these commodity products, and we work with the partners who make the real stuff, which is really cool. So before I jump into the next slide, I'm going to kind of quickly just describe each one of them so everyone has kind of a little bit of context to what we're talking about. So the first one should be, pretty clear, right? Crypto custody, Julian already described this, and it's the crypto private key safekeeping inside. That is, I think, the backbone of the crypto economy as a whole, because how do you get mass adoption? You take away complexity and you make the user experience easier. That is done by crypto custody because you're abstracting away any complexities around private key safekeeping and signing. So that's one commodity product. Number 2. Yes.
Quick question on the custody thing. Solaris has applied for the German Kryptoverwahr license. However, you are still under the grandfathering, right?
Yes, correct. Almost 2 years ago, and it's let's say it's us waiting for the BaFin and not the other way around. So we're very excited to get an update there. But we've been in operation for since 2019. So we really have no kind of no concerns in that respect. But yes, we're still kind of a little bit, say, on the waiting list.
Okay.
So that's one that we have live, and we're working today, and we're definitely, as you'll see in the next slides, leveraging with new use cases. Number 2, crypto brokerage, fiat to crypto brokerage. Just like what Julian mentioned, this is via API. This is a banking as a service setup, meaning this is crypto brokerage as a service, meaning you connect to the API, you can become a broker without you having to have a license or work with exchanges or have anything to do with execution. You take it, you plug it in, you add it, and then you embed it to your use case. That's another commodity product. The number 3 one, crypto collateralized loans. Really, really exciting one. This is euro denominated loans. So you receive euro secured against crypto. So, I mean, this is something we'll get into a little bit later as well, but if you want to collateralize crypto because you have a lot of it, because you want to receive euro, you can do so without selling your crypto. Commodity product.
These are going to be loans that are directly coming from the balance sheet of Solaris.
Yes.
You are the lender.
Yes.
Okay.
Yes.
Cool.
Good point. And you can only do that. And this again, I'll deep dive a little bit later. If you're a bank in Germany, right? And this is something that's might not be so commodity, right? Because there's not many banks or not many companies that can do that, right? It's definitely the banks that can do that. So that's one another product that we're working on, and we have a lot of legal clarity on it. We're working with building it right now, and you'll see that in one of the realized use cases. I'm going to go a little bit quicker on the bottom ones because this should be maybe hopefully a little bit more obvious to the rest of the audience. Banking as a service, bottom left. I mean, that's what Julian's talking about, right? Being able to give customers bank accounts in the Uber app for the Uber drivers. Yeah, exactly. Debit card issuance, same. You attach the cards to the accounts. Money transfer. I think it is worth me kind of mentioning here that this is euro accounts for kind of payment movements, right? Sometimes companies need to receive money for it to be moved somewhere else, and you don't necessarily need the full banking setup. You know, it's a little bit overkill, and we also provide this in a more flexible setup, so more flexible banking, the way I would call it. And then finally, KYC. What does this all mean? It means you can choose your commodity products. So you've got that little icon on the right side. You can pick and choose. You can call us and you say, hey, I'm building something. What do I need to do to make it work? And you get to pick and choose these. So that's it for the dry stuff. And now we're actually going to move on here to the use cases. So to remind everybody, we have 3 categories. So we have live use cases. These are the ones that you can look at today. and you can use and you can experience for yourself. Once I've just shown you what has been made, I'll show you then what has been realized, what we're building, which in my opinion is very exciting stuff because it hasn't really been seen in the market yet, in my opinion. So jumping into the first live use case, we have Nuri. So Nuri used to be known as Bitbala, and Bitbala was one of our early partners with our banking as a service, and one of the first pioneering crypto neobank. And what they offer is full banking accounts with cards, with payments, the ability to receive salary, and Google Pay, Apple Pay, all of the features that you would expect to a neobank offering to have. They're all there. But there's more, right? Because you can receive your salary in your account and you can buy crypto directly out of your salary account. That's really cool. On top of that, Nuri, what they did is they also developed a Bitcoin interest account and auto savings features on top of what we have built. So there is not just a limitation of saying, hey, look at the bottom here, look at these different commodity products you can use. You can also go to other partners that can also service additional needs to produce additional unique value services to the market. The last thing I'll mention here that I really, really love to say is, yes, you can buy crypto from your salary account, but what you can also do is you can take that crypto and you can even take it off of Nuri. You can take it on chain. You can put it onto a MetaMask wallet. You can connect it to DeFi. You can buy an NFT. So the point is this ecosystem is fully open in such a way that it's not very common for setups like this that provide such an easy user experience for banking and crypto, embedded finance and crypto right there. Very, very nice use case. And what is the USP? It's a crypto pioneering neobank that is enabled via our commodity products you see in the bottom left that I went over with you.
Just one
very nice
question, because you mentioned that you can buy an NFT from your account. From my point of view, I haven't seen this direct kind of integration. You usually would need to transfer money into your MetaMask and then put it to really buy an NFT on OpenSea. Or have you moved these two baskets closer to each other? How does the transaction really work if you want to buy an NFT on OpenSea, for example?
No, good that you clarify that. And really what I'm saying is that we're not the just crypto exposure. We're not just a derivative that says you can get join in on the price volatility, but you really hold the cryptos, and it's really in a custody wallet. And we sign transactions onto the chain so that you can send Ethereum or Ether to your MetaMask wallet from your bank account, which is really cool. And then exactly what you said, right? You connect MetaMask to OpenSea, for example, and then you can buy. So it's definitely not, I should clarify, right? Nuri doesn't directly integrate with NFTs, but they have the ability for you to pull those cryptos out of the bank account, bring them on chain, put them to MetaMask, and use it for anything in MetaMask. Is what we see a lot in the market is a lot of neo brokers and crypto neobanks offering crypto, but not really in an open wallet setup. And it's really worth clarifying here in this use case that we absolutely do offer fully open crypto wallets, i.e. being able to send them to your self-custody wallet.
No, I fully agree with you. And I think the core question is, if we look into the future, at some point in time, my mother will be, and she's 84, and she will be able to buy an NFT or sell something as an NFT. And the question being, which user interface is she likely to be using on her iPad, where she just touches and the payment will be done automatically. And for me, the core question is, will that be a banking operated kind of interface that she uses to make her payments on and so on, or is it likely to be a non-banking provider who's offering her a wallet that has interfaces to all possible use cases for crypto? Because we all agree that in principle the underlying idea of crypto was to get rid of the banking system and to do something which does not necessarily is related and operated by a central intermediary as banks used to be.
Yeah. I think my answer to that question is that you will be quite interested in one of the 4 realized use cases that I'm going to show you, because it's going to answer that question. And then we'll jump into it from there, because I think it'll be quite exciting and we can talk about it from there. But let me move forward a little bit quicker. So the next live use case we have on our portfolio is Vivid. They're a full feature neobank. What does that mean? It means that they very, very heavily go on banking features, and this is something that they do, right? What we empower them with is the digital banking, the banking as a service, the debit cards, the KYC, and then again, same thing as Nuri, right? Apple Pay, Google Pay, payment services. They also, and we support them, metal cards with loyalty programs. This is something they build, the loyalty programs. The additional features that they do without us, and what I mentioned before in the last use case, is you can invest in crypto and stocks. And the crypto, what we've defined here is CFDs. This is contract for difference. This is a derivative product. And when you buy a CFD, you do not hold the crypto itself, or you do not have private key, and the blockchain does not recognize your ownership. This is rather a bilateral agreement with the central counterparty that says, yes, you may participate in the value change of a specific security. This is something that they added themselves because they said, hey, we want to offer 100 cryptos, and we're going to do this with CFDs because it makes it easy for us to be able to list this many cryptos with little risks. And another piece here that we supported is their ability to go live in 4 different countries at once with local IBANs, and the ability to actively market their product in each of the local countries with language support and everything like that. So we do the country regulation. They do everything on top with all of the features and the crypto pieces and all of the marketing and all of the platform and the front end. But we do all of the stuff in the background that you don't want to be a bank to enable. So that's another good example. Yeah, go ahead.
I haven't heard about these crypto CFDs, and they are offering it from their balance sheet, or is it Solaris balance sheet too?
Yes, this is from another partner, actually. So we provide some commodity products, and other partners actually provide their own commodity products. And correct me if I'm wrong, Julian, I believe they work with CM Equity.
Yeah, right. So we don't do capital market products so far. So we don't issue them and so on. We will broker them in the future, though. So we have a security brokerage as a service product, but the derivatives are not coming from us.
Yeah, exactly. So the bottom line here is what can you build? What kind of USP can you produce? You can become a full feature challenger bank without you ever having to get a license in the first place. And then, like I said, you can speak to other even companies if you want to produce unique services like many cryptos with a CFD kind of flavor. But ultimately, we provide, again, the commodity. Next one that is currently live that people are probably aware of is Trade Republic. And they're a well-known market-leading neo-broker that has redefined the brokerage experience in the same way that Robinhood has done in America. And they now offer crypto exposure, again, not through our commodity products, but through another partner. Again, it's a bit of a similar way where you can give yourself crypto exposure, but currently you are limited in the fact that you cannot sign on-chain transfers and send that crypto to MetaMask. This is not something you can do, at least at this time. I can't say towards the future. And we empower Trade Republic with a Euro collection account for easy on and off ramp. So for the first time, I said, hey, I want to buy stocks on the platform. I actually got the app, and I was amazed by how easy it was to fund it, because you're sending Euro to yourself because you get a unique IBAN on the platform. You're not sending it to some random bank, you're sending it to yourself. And this is empowered by us with what we describe as money transfer.
Okay.
So really nice, because this is tangentially related to crypto, because they also offer crypto, but they are very, very big neo broker, and they still see us as value, providing value with a money transfer service rather than the full digital banking service. So now you kind of see, hey, okay, money transfer is very useful for a brokerage use case. And this is what we also see quite a bit in the market. And the last one that I will show for the live use cases that anyone can go and test is Coinbase. And Coinbase literally needs no introduction. They're one of the biggest crypto companies and publicly traded. They are market leading crypto exchange. We empower Coinbase with automated customer identification via our bank ident product. Julian briefly touched on this before. I'm not going to go too deep into this. What I will say, this is a faster, cheaper, and simpler customer onboarding solution than what video identification is. And it's called bank ident. Use a qualified electronic signature to validate that the customer already has a German bank account. And then we then enable Coinbase as an AML obliged entity in Germany to quickly and very, very fast with a very nice user experience onboard their customers so that they can gain access to their services in Germany. USB, fast and easy customer acquisition. I think this is far out of scope of this conversation, but bank ident is an absolute game changer for the German market because video identification put the German market at a disadvantage relative to other countries that did not require video ident, rather just a selfie ident. But I should digress here by just focusing on the fact that, say, Coinbase still works with that, just with that KYC piece. So now you see kind of the spectrum of different types of use cases that we support and different ways in which we support with the different commodity pieces. So that's the last of the live use cases. And this is my personal favorite. So the realized use cases, the ones that Julie and I are working on a day-to-day basis, the ones that you will not see any names, but we will describe to you what they are and how they're used with our commodity products and some macro level insights that we see in the crypto ecosystem and how it's developing in the future. First one we have is a full feature neo broker. So recall, you know, we called Vivid a full feature neo bank. This one is more so full feature neo broker. So when we say that, they are an established securities broker that has decided to integrate full payment accounts on their platform with card issuance. So you can receive a salary, for example, and buy things with that salary, and also natively in the app buy securities in a very cost-effective way. Included in that, they have said this is absolutely necessary to continue competing in the securities brokerage space, to also natively offer full real crypto on the platform adjacent to securities. And this is what we've done for them. So we've offered crypto custody, crypto brokerage, digital banking, cards, and KYC. This is really, really very cool because similar to Nuri, we are able to offer the native crypto buying, selling functionality on their platform next to securities with an open crypto wallet architecture. Same as with Nuri, you can do on-chain transfers. So no longer do you need to go to an exchange like Coinbase or Binance or Kraken to be able to get those crypto and send them on-chain. But now you can go to the neo brokers who are creating a very nice user experience. And crazy, adding full embedded finance, you can receive your salary in a brokerage platform. That's something I'm sure not many people have seen before. So my macro insight here is that crypto exposure is becoming a commodity. You've seen the CFDs. That's something that's becoming quite popular. But what isn't so much a commodity right now is open wallet architecture. Why is this a differentiator? It's a differentiator because this is not easy to do in compliance with regulation, because there comes AML and AFC implications and requirements. KYT, know your transaction, tracking. You need to monitor the blockchain. You need to do certain things to prevent exposure to certain types of risks. So this is something that we see and expect to become a trend in the future, that these brokers not only start offering crypto, but also start offering open wallets, but it's going to be a little bit slower than just exposure itself. So this is a quite exciting use case that we're working on today.
Maybe just to get the terminology correct, we can differentiate between, of course, my own hardware wallet, for example, and then you say, usually if I want to trade via Coinbase, I would need to pay fiat or crypto into their omnibus account, where I'm just part of a huge wallet. And what you're offering is that I have my own wallet, even though it's held in custody with Solaris, and I can directly use this wallet for trading purposes, correct?
Yes.
Okay.
Yes, exactly. So again, you're totally right, right? And maybe it's worth me mentioning that we're banking as a service, and every single one of these products that you see here, this is the banking as a service model. So when we say crypto custody, this is an API that we give to our partner, and their partner integrates that onto their backend, and then creates a front end in which, if I'm a customer that says, "Hey, I want to go to this neo broker," I get an account, and immediately when I open up my account with them, I receive a custody account for every single crypto asset supported, a crypto account. So I don't have a private key, right? Because Solaris holds the private key, but they have accounts in a kind of a neobank kind of format, same as with digital banking. Yes, Julian, feel free to add something.
Cool, thanks. Moritz, one example for what perfectly nails down the open wallet saying or wording is, imagine you buy an Apple stock. The only thing that you can do is either hold it or sell it. Of course, there's a thing that's called Depotübertrag, where you can have that from your Comdirect konto to the Flatex konto or something, but usually you don't do that, and that's very cumbersome. So a closed wallet is a little bit like our Wertpapierdepot, our security custody, right? We just buy a stock, leave it there, and then sell it. With crypto, we and many replicate the same aspect with crypto. So there are many services in the German market where you can buy Bitcoin, hold it and sell it, but you cannot buy it and transact that and send it to your MetaMask account or to your Ledger stick where you do custody. And we mean with open wallet infrastructure that the end customers of our partners can buy crypto and then also do on-chain transactions out, but also receive it. And this is really a differentiation factor in the market still, because there are so many services that do not offer that. And so basically today you can differentiate with that. I think in the future it will be harder and harder to have an offering that is not allowing for these on-chain transactions.
Yeah.
Yeah.
No,
you saw.
I think we touch on the KYC and MiCA related issues later on, but interesting to see. How many coins are you currently operating the custody for?
So we'll have by June 15 live, and by September latest, it will be 2025 we are aiming, and then we have an ambitious plan. We'll probably not be the player like exchanges like Binance, for example, having thousands of coins. Also, given that we are a regulated institute in Germany, also with the banking side, we'll probably not offer things like Monero, right? Because we cannot offer or guarantee for on-chain monitoring. So we think our offering is perfect for partners that want to have a kind of a high quality selection of high quality coins rather than kind of everything. Because if you want to have everything, you will anyway go to Binance and FTX.
Got it.
Yeah, good point. Okay, so jumping on to use case number 2. This is the one that, I think we touched on a little bit before when we were talking about Nuri. This is a regulated NFT marketplace. This is the planned first ever German regulated secondary marketplace for NFTs and tokens. This is really exciting. To give some background here, the way we enable this NFT marketplace from a high level, this NFT marketplace, this token marketplace, you can, as a primary issuer, you can, yes, you can sell your tokens to a customer, and then that customer can buy it. Similar I mean, a little bit similar. You can buy it, but you cannot actually sell it when you're in a primary issuance market. So you have to sit there and hold it. Obviously, a secondary marketplace is what allows you to do that. This partner is the multilateral trading facility. They are the exchange. We are the bank and the custodian, and we leverage those two commodity products to enable instant delivery versus payment between the euro and the crypto, the tokens, the NFTs. So you can buy an NFT with euros, you will receive that NFT instantly because we will use our custody and money transfer APIs to manage the actual bookkeeping of that, enabling the marketplace to perform instant trade settlement. The macro insight here is very, very exciting because why hasn't tokenization taken off, right? If you buy something in the primary market, for example, a tokenized bond, you can buy that tokenized bond, but you can't sell it. You can't sell it in the secondary marketplace. You can find someone, you can call them on the phone and say, hey, do you want to buy my token? But that's not very efficient, right? And so the insight here is when you don't have much liquidity, you don't see much demand. And secondary markets enable profit taking. They enable you, yes, you can buy them, but then you can sell them as well. And that is what's going to fuel demand. And that is also what's going to fuel the tokenization space as a whole. As this piece of infrastructure is built out more and more, that will enable the primary issuers to be able to list them on secondary marketplaces that will have the demand, then will consequently be able to kind of stimulate the token ecosystem. So that's very exciting from a conceptual standpoint. This will obviously start a little bit slow, but yeah, this is the second unique use case that we're currently building on our platform.
I think that's quite cool. However, when you say it's a German regulated secondary marketplace, I'm a little bit struggling with the concept because a marketplace for NFTs will not be an exchange in the meaning of the German Börsengesetz, and it will not be it's not a multilateral trading facility. So essentially, you would, from a legal point of view, it's a matchmaking kind of a platform,
so,
right?
Yeah. So you're right, right?
For the matchmaking, correct?
So you do. You don't necessarily need regulation for matchmaking. You can create a bulletin board, right? And that's a common approach to secondary marketplaces for tokens, but this is not. This is an order book matching, centralized order book matching engine that is exactly an MTF. So they are becoming regulated, and their application process is waiting. So this will be basically, you know, you can use the analogy of BSDEX, but for NFTs.
Okay.
Yeah.
Understood. Okay, that's interesting as well, of course.
Yeah. Last thing I'll mention here, right, is this is going to make it quite two good things that come out of this. One is recourse. NFTs, you know, they have been known a little bit for breeding ground for money laundering because of, you know, OpenSea and anonymity and things like that. We can get rid of that, right? Because we have KYC in place and we know the counterparty of the trade. That's one good thing. And number two is you can buy these NFTs with Euro, which makes it a lot easier for the let's say the 80% of the people that aren't really enthusiastic about holding their own private keys, or going on chain and getting MetaMask's wallet. So we make this very, very easy to buy and sell on the marketplace.
However, I mean, the NFT is intended to be unique. So you have one single NFT you can trade only, and then you have to, because they're by definition not fungible. So liquidity, if you look at each NFT as a security of its own, usually has one single unit only, or how do you solve that? Or is it or is it fungible NFTs?
So admittedly, you caught me here red-handed. We're starting with ERC20, but the end game is absolutely ERC721, and both ERC20 and 721 will both be on the exchange. So you will be starting with the fungible tokens, and then eventually moving a little bit later on to the non-fungible tokens. But you're correct, right? That's yet to be seen, and this is actually not what we do, right? We're again a commodity provider for the actual exchange itself. That will be the perfect person to ask that, for you to ask that question to. Hopefully in several months' time, we'll see.
Okay, cool.
Very nice. So I think I think we only have about 9 minutes here, so I'll try to pick up the pace.
Yeah, maybe Alan, You just touched briefly on this CDeFi case, and then we jump over the crazy ones, and we do the wrap up.
Sure. So this is the DeFi-enabled savings bank. And the quick description here is that we work with a partner that offers access from crypto to DeFi and makes that movement very, very simple. What we do is we enable for our partner on the platform the movement from euro to crypto. So what you do when you see them combined together is you go move from euro to DeFi in an order of magnitude more simple than if you were to do it manually, i.e. Getting your euro onto an exchange and then funding your crypto, then moving on chain and then going to a DeFi, et cetera, et cetera. Instead, there's only 2 steps where you go from euro to DeFi, and then you gain the benefits of the return. And so this bank is, or we are the bank, where we're going to enable our partner to become a DeFi-enabled savings bank. And the macro insight here is that what we've seen is DeFi adoption mirrors crypto adoption as it was several years ago, which was user experience. And as we see partners that we're working with, like this one, improve the UX of DeFi, we will also see increased acceleration of adoption of DeFi. And so what we do is we provide that unparalleled, easy access to DeFi, leveraging all 5 of the commodity products that you see here below. So that's what I'll say about here. I'll quicken the pace though, so I can hand it over to Julian. Last one is crypto collateralized loans. Won't spend much time here because it's ultimately exactly what it is via API. Crypto collateralized loans pledged in custody so as to avoid the actual sales event and avoid taxation of the movement of crypto, and you can then receive your euro denominated loan. This is being built currently. So if anyone is very interested, you know my LinkedIn, and feel free to reach out. I'm happy to discuss over a bilateral call. So I will jump more quickly into the crazy use cases. And this is innovation.
Ellen,
we think
I think it makes sense to skip them all over, and otherwise we cannot finish up. But more, if you want to
fair enough.
That's what we all have been waiting for. We have a few more minutes.
Okay. Well, I'll touch on them, and then if I'll hand it over to you, Julian, and then if we want to go backwards, we can, and then we can even talk about it, because this is very lofty kind of stuff. So all good. So use case, play to earn gaming, right? Axie Infinity, CryptoKitties, DeFi Kingdoms, they all have a user base completely different from what I have just described in the past 8 use cases, in which these are not people interested in financial services at all. They're interested in gaming. And these people are gaming and receiving tokens as a result of that. So one of the things that we've heard is that user experience is going to become a big question on how do we make it easier for customers to go between euro and crypto, and then be able to play to earn, and then turn that into currency that they can use. And we've seen, lots of different ways this can be used. This is just a guess, right? When we show these commodity products here, custody, brokerage, KYC, money transfer, it's a guess, right? We're only talking to people now, and there's nothing realized, but there is conversations, there's interest, and we see the ecosystem developing in that direction.
I truly believe that gaming has the potential to be the key driver of this broader acceptance of NFTs, and I can very well imagine that even gaming and trading will be something that mingles and gets much closer than we are used to.
And I saw your head nod when I showed you this, and I think you were anticipating this use case, if I'm not mistaken. Yep, exactly. And again, sorry for the speed here, but I'll move to the next one. The metaverse, right? People are going to start putting their lives into these kind of virtual worlds where it's also, like, people say virtual reality, right? And people are also saying metaverse, but the way I see this, metaverse is integrating the ownership economy, integrating Web3, integrating another level of financial freedom within the virtual world. And that is, those things combined are the metaverse. And that is kind of a very good position for us to be in, to provide these commodity products, because that is where it's going to be needed most, that we see in the future. People know Sandbox, people know Decentraland, and the most recent ApeCoin, yet to be seen. And we look forward to working with innovators and entrepreneurs to leverage our commodity products. And with that, I will hand it over to you, Julian.
Awesome, thanks. So basically, we want to now look back. So we talked about embedded finance. We talked about embedded crypto, how we added that, right? We talked about how we as Solaris can enable anyone via our APIs to offer any kind of financial or crypto services to the masses. So basically, if you look at it, what are we doing? We are kind of the launchpad into anything crypto, into anything Web3. You just take these products, these core products into your service, and you do the magic, right? As we could see from this many various different use cases that we already have live, that we are about to build, or that we can even envision, right? Everything is possible with these core products. And that's why we want to be the launchpad to Web3. And on our next slide, you can see how we envision that. You see in dark orange on the left side, that's Solarisbank. Then in dark blue, that is our partner, the organization of the entrepreneur that we want to address with this service offering. And then in pink, you can see the end customer. So basically our claim is we are not the entrepreneurs, right? We are the bankers, the crypto dudes, the ones building the boring products. But you out there among our 15 participants, out there in the European Union, people who think about crypto see these tremendous value it can bring in these various different niche products that can eventually boom. And like, look at the crazy boom of NFT markets in the last year. We can leverage that together with our partners. They bring the ideas, we have the APIs, and on the right side, on the bottom side, you can see again, what are these different products? We highlighted them quite well over the last slides. And yeah, so there's actually only the what is it? How do you say? The only border there is the where your imagination stops. And for this, however, it is really hard to build this if you don't have these licenses, and that's our product, that's our business model. Here we can wrap up. Maybe we have some time for one more questions. I can't see any questions in the Q&A tool, but Moritz, maybe you have some closing remarks.
Yeah, cool. Thank you very much. It took quite a time, but I think it was pretty interesting, and particularly doing these live use cases was pretty enlightening for me at least. One aspect I'm seeing more and more when you talk to the players in Germany particularly, that most solutions are a combination of components that are provided by different players. And if you talk to some of them, then someone is saying, yeah, well, we do this, and we use Solaris for that, and we use Bank for this, and Von der Heid for that, and Tangani for this, and Coinbase for that. And eventually, to design and shape different new products, you are at need to combine these services, which is entirely different to what we used to see in the banking industry in the past, where even the ATMs were operated by Deutsche Bank, and then 10 meters next there was an ATM from Commerzbank in the very beginning. This trend is towards collaboration, which appears to support the idea of decentralization. However, banks are centralized kind of entities. And I'm wondering if this is moving in the right direction, or if we run a risk because too many component providers will eventually make it pretty difficult to figure out who is liable and who is the one to blame, or whom to claim if something goes wrong. That's getting really complex if one banking offering is provided by 6-7 different people.
Mm-hmm. Yeah, so maybe I can take this. Alan, feel free to add up later to this. I think, like, what are we? We have two things. We have, first of all, the most complete platform there is, right? And at the same time, we bridge both worlds. So we have crypto here and banking there. And the banking side, we are actually the biggest provider in the European Union for banking as a service, including the UK. So, and why are we this? And why have we grown so much? Because of this completeness approach, right? As you just said, like there are many offerings that take quite some time to build, that are highly complex in operating. Why is that? Because of so many different parts, of so many different counterparts you have to talk with. If there's a transaction stuck, if you work with a moneymaker here, a payment solution service door there, and then you have a custodian in the middle, and if a transaction is stuck, you don't know who to call. With Solaris, you have the one-stop shop solution. So this is definitely putting ease on building your crypto business. We are convinced that this is helpful. And then on your other part of the question, the decentralization part. The decentralization does not come from I use this and that many intermediaries. Actually, it's better to just have one. Important is where decentralization is important is where are the assets settled? And here it is the blockchain, no matter if you use 5 services in the background for the regulated stuff or just one. Decentralized it is anyway if you have Bitcoin with us, because it's real Bitcoin. It's not a CFD, it's not an ETN or anything, right? It's not a securitized thing sitting at Clearstream. No, it's sitting on the blockchain. So that part is decentralized. And for the rest, let's keep this complexity out. Let's really abstract that complexity and just have one provider. And that's our strength.
Okay, got it. One question from the auditorium: how long does it take to start our business with Solaris? Maybe you can just briefly give a reply on that.
Sure, I can jump in on that, Julian. Yeah, I mean, to give some context to what that could mean, we actually have some, in the commercial process, specific milestones, and these milestones are designed to unlock focus and speed. And the main milestone is what we call the term sheet, which is a simplified agreement saying, hey, yes, we are agreeing on 4 out of the 7 commodity products, or 2 out of the 7, or 3. And we're locking them in and 100% agreeing to them in a small document and agreeing to the commercials. And that, once it's signed, allows us to unblock our resources internally to say, hey, yes, we're going to do this. That is what makes it a realized use case. Once that is done, then it's a matter of months. And of course, it depends, which is the classic answer. It depends on the complexity, it depends on how many of those pieces are being used. But anywhere between, yes, 2 months all the way up to, you know, the bigger ones with fancy card issuance schemes that you're working with Visa on will take a little bit longer, but we can be quite fast. Yeah.
All right. One final thing I just wanted to mention and to ask you, you might be aware that the European Parliament is currently talking about the MiCA, the Markets in Crypto Asset Directive, and there has recently been this Bitcoin ban, which we luckily were able to get rid of, and now there is another issue which is related to something that's called unhosted wallets, which means that some members of the European Parliament claim that in order to, or that MiCA should only permit that fully KYC'd wallets may be used, and is trying to prohibit the use of wallets for all providers of financial services that don't have a kind of full KYC. They want to have full transparency, even though the details are not clear so far. You have a view on that? Because to some aspect, the nice thing about crypto is that I personally have the ability to decide if I want you to know my identity or not. And of course, if I want to transact with a bank, I better provide my identity, but there might be other transactions where I want to hide it, and this is a tricky issue. And even HBI, the Hanseatic Blockchain Institute, is currently in the process of finding a standpoint to it, because we want to communicate this to the public and to the European Parliament, as we did on the Bitcoin ban as well. Do you have a view on that?
Yeah, so I tweeted also about that yesterday. To my view is that the travel rule and the implementation of that can have the biggest risk to innovation in crypto. And yeah, I mean, of course, the potential ban that was on the table 2 weeks ago in the parliament as well, but this luckily got away. Well, we got away from that. But with the, so the risk that I see is basically the following. Say you make it operationally and also from a risk perspective, also financial reporting and all this so cumbersome and so dangerous to not comply with the law that eventually some custodians or VASPs, right, virtual asset service provider, no matter if it's an exchange or if it's us as a custodian in a B2B2X business model, will shut down the open wallet functionality, will not allow for doing on-chain transactions out, will not receive or will not allow for kind of displaying the public key. And if this public key is not displayed, you can also not receive funds on-chain, right? So you kind of close it down. You have a closed garden approach. And what would that mean? First of all, it would all be kind of a little bit more centralized, a little bit like buying the Apple stock, which you just like put into the portfolio and sell it back or just hold it. That's the two options you have, first thing. And the second thing, obviously, it would kind of be very limiting for the whole new ecosystem that is evolving. What we can see with NFTs, what we can see with DeFi. I mean, I took a loan for myself, quite a substantial amount in Euro funds, swapped that into stable coins, put that into the Anchor protocol here, sent something to crypto.com, did centralized lending, and overall earn a yield of approximately 10, 12, maybe 13%. All these things wouldn't be possible since I couldn't transact all this money to these different spaces, especially not in DeFi. So DeFi and NFT, maybe crypto gaming, social media tokens, what we can see with the BAT token and stuff like that, these things would dramatically or get a dramatic hit for innovation by a very strong crypto travel rule implementation. And I hate it that people that I know from my past job in lobbying are telling this lie about, oh man, look, in fiat we have to do the same thing. You have not. It's different. There are different thresholds where you do not have to report any transaction above 1,000 euro and tell this to BaFin, which is a huge data protection concern. Another aspect that is also very critical, I try to implement a narrative about putting traffic lights into the air, right? With crypto, we have the opportunity via services from Chainalysis to trace every transaction. So we can see if it had exposure to a sanctioned Iranian exchange. Nothing against Iran, but it's sanctioned, so we have to comply to law. How do we do that? Well, we look on the blockchain, right? We couldn't do that with a SEPA transfer. If we as Solarisbank receive a SEPA transfer from a Polish, German, or French bank, we cannot look behind. We just see this one transfer. We don't know where it is coming from. With crypto, it's different. We can look through different exchanges and trace it back for Bitcoin, back to the so-called Coinbase. So the issuance of the new Bitcoin, whenever that was. Maybe sometimes our custody wallet is hit by a Bitcoin that was maybe from the first block back then in 2009. We can trace it back. That's not possible with fiat. And therefore, we think there should be different rules applied to it and not just a kind of a parallel system that we have in fiat. And now my rant is over.
Good. I agree with you, and we will put your ideas and your comments into our positioning paper on this very, very relevant issue, definitely. So time is over. We have not as much attendees as usually. I'm so sorry for that. However, if we put the record on our channel, I believe that we will be able to communicate this to an even larger auditorium. Alan, Julian, thanks for being with us. I'm very much looking forward to meeting you, at least Julian, on next Monday in Frankfurt.
I'll see you there too.
Thanks for having us, Moritz. It was fun.
Tschüss, all the best. Have a nice evening.
Ciao. Bye-bye.